Welcome back to the show, everybody. Check out these headlines. What's at stake? The new bottom for crypto. Hedge funds targeting USDTether collapse? Uh-oh. We got a lot to go over today. Gary Gensler and Brian Brooks delivering straight fire. You're going to want every bit of it. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. Now the microphone is on for take two. Wonderful. Yeah, some days I just wonder how many times do I have to do this before I get it right on the first go. Anyway, the pains of having a channel. Good morning, good afternoon, wherever you are. Cryptocurrency market cap $1 trillion right now. It is June 27, 2022. Bitcoin 21,300 plus, but for how long? Ethereum 1,200 plus, but for how long? XRP 36 cents, but for how long? Yeah, good morning, good afternoon. Let's get into it. The range of price this morning, 35 cents to 37 cents. We're off by more than 5% right now. Let's take a look at this. I have a great appetite for risk, and I use that appetite for risk in cryptocurrency. But I also hedge inflation that we're currency feeling, plus my appetite for risk by buying gold. And I do that with Glint Pay because I'm not one of these, it's this or that. Why can't we have both? And the answer is we can. And there's a link underneath the description, and you can too. Take a look at this. This is a do not miss right here, ladies and gentlemen. John Deaton just posted less than an hour ago. He's looking forward to being on Making Money with Charles Payne tomorrow between 2 and 3 p.m. Eastern Time. I guarantee you this is going to be straight fire, and you will not want to miss 1 second of it. We will be capturing every bit of that. Shout out to John Deaton and Charles Payne. We'll cover that for you. Take a look at this. I tell you, this news is going to get you through this whole segment today. Everything we look at is just absolutely, it is fire what's going on out in this space. Morgan Stanley reports moving to proof of stake, will not solve Ethereum scaling problems. Uh-oh, and where have we heard that conversation before? Oh, that's right here on this channel. Proof of work is not necessary to run a blockchain. Hello, here's another fast thought. Neither is proof of stake. Uh-oh. What do you do then? Because proof of stake in long-term scalable problems, you're going to lock up so much of the token, you're going to create scarcity and drive up price. That's what's going to happen. It is it's real evidence to me that it's not just a YouTuber saying it. This is Morgan Stanley, everybody. Let's pay very close attention because there's more to hear. Sources close to Goldman tell Eleanor Terrett from Fox Business News that the report is incorrect and there is currently no deal in the works to buy Celsius for raising $2 million to do so. Head on a swivel. It sounds like they're letting Rome burn. Pennies on the dollar. That's how they buy, ladies and gentlemen. Keep an eye on that and keep an eye on this. Gary Gensler, SEC chairman, on CNBC this morning. Bitcoin is the only one I'm willing to say is a commodity. Are we going back to the MIT days, Gary, where we understood clearly that Ethereum was a security? Is that what we're doing, Gary? I think it's time for Mr. Intuitive to do another Gary video. Where's that at? We're waiting for you, Mr. Intuitive. Look at this. This is actually CNBC with Jim Cramer and Gary Gensler. You need to hear all of this. Let's start with the first clip here. Check it out.
Chairman, it is always great for you to come on the show. Thank you so much. I'm not quite sure.
Good to be with you, Jim.
There we go. All right, Mr. Chairman, let's just go right to it. You have been adamant that there should be some degree of coordination with the CFTC and you about trying to make it so that we have more clarity, let's say, on cryptocurrency. Where's the state of play crypto right now?
Look, this is a highly speculative asset class. We've known this for a long time. The ups and downs of this speculative asset class, Bitcoin, and hundreds of other tokens. And many of these tokens offer the investing public, or the investing public is hoping, I should say, hoping for a return. Just like when they invest in other financial assets we call securities. And many of these financial assets, crypto financial assets, have the key attributes of a security. So some of them, they're under the Securities and Exchange Commission. Some, like Bitcoin, and that's the only one, Jim, I'm going to say, because I'm not going to talk about any one of these tokens, but sure, my predecessors and others have said they're a commodity. Working together, there's two great market regulators in this country. I have the honor to chair the CFTC, a terrific agency. I have the honor now to chair the Securities and Exchange Commission. A little bit different remits, a little bit different approaches, but working together with the banking regulators as well. There's work to be done there around what's called stablecoins. There's a lot of work to be done to really protect the investing public. And many of these tokens right now are trying to operate, they're potentially non-compliant, and I'll leave it at that, Jim.
Well, let's listen to the second clip that he has here for us. And he does mention in there really that, Bitcoin's a commodity to him and everyone else, and he doesn't want to speak to anything else. Well, let's get to this part, because Jim Cramer, look, everybody talks about these things for a reason. They don't mention certain things for nothing. And I say to you, there is that mention again about USDTether. If regulators and governments come after USDT, we better prepare for a new bottom in crypto. Don't believe it. It's still true. Take a listen.
Okay, well, one of the things that I love about what you've always believed in is transparency. You mentioned stablecoin. I did not bring that up, but there is one that is regarded as being perhaps not as transparent as we'd like, which is called Tether. And it's very big, about 60 billion. If they told us what they were really in, what they had their money in, wouldn't that be better for everybody?
Look, transparency is a key part of the investing formula. It's kind of part of the basic bargain that you get to, on a quarterly basis, know something about the companies, and if material events happen, like they do all the time, and companies make additional filings called 8K filings, and the public gets to decide what risks they want to take. That's the basic bargain. Similar to stable coins, we have something called money market funds, and in money market funds, you get to see what's underneath the hood, what's really below that one-to-one relationship, where in a money market fund, the public has come to understand that, except for in very unusual times, they get $1 for $1. Or at banks as well. Stable coins have similarities to bank deposits, that you have something standing behind that relationship.
Just to point out here, and I mean, look, there's a lot I disagree with Gary Gensler on, but this is not one of them. Being able to see underneath the hood is something that should be a given, right? And we know USDTether, to tell the other side of the story, has been saying recently they're about to do that for all of us. But here's another problem when it comes to if you're going to be a stable coin. And Brian Brooks is going to tell you better than anybody. It's not just about what's under the hood. It's about whether you're actually licensed and regulated. Take a listen, because here is what we see. Hedge funds have targeted from Bitcoin Archive. Hedge funds have targeted Tether, borrowing hundreds of millions in loans to short USDTether since the Terra Luna collapse. I've been asking this question since the Terra collapse. Is USDTether next? And if it is, we got a new bottom coming. So the question is, does USDTether meet the terms that are given by Brian Brooks from Bitfury Group, the former OCC, the Office of Comptroller of Currency, the terms of being a stablecoin? Take a listen.
Can I just put an underline under what Brooks just said? I think, coming back to your question about what's the temperature in Washington around these things, what I would say is stablecoins are actually the tip of the spear on crypto regulation, and it's the one area where I think there is weirdly a really strong bipartisan consensus. I mean, there's not a lot of that in the world today, so man, bipartisan consensus on anything is a good thing. So this gets to Brooks's point about disclosure. When I was the controller, I signed the first regulatory guidance that defined what a stablecoin was that would be allowed inside the US banking system. And what I said was that a stablecoin, to be in the banking system, has to have three features, okay? First, it has to be backed by risk-free assets, meaning it cannot be backed by junk bonds, long-dated corporate securities, or whatever. I used to joke that one of the popular stablecoin projects was backed by 68% bank deposits, 12% partially hydrogenated vegetable oil, and a set of other things, right?
What stablecoin might he have been talking about? USDTether, perhaps?
That's not a stablecoin. It has to be backed by risk-free assets, meaning insured bank deposits and short-term treasuries and nothing else.
And nothing else.
Second, it had to be redeemable on demand and at par. So if you meet those three conditions, in other words, if you really are a traveler's check, except you're operating over the internet, you're a stablecoin.
There you have that. Now, we're not done because we got more for you here. Now, when will we see the results of all the efforts of the SEC for clarity on crypto? I'm not going to play you this because he's asked that question by a journalist or a reporter on CNBC, and he dodges the question. But the reality is picking winners and losers is not a strategy. It's pay to play, and that is not a solution for the future make. And here is Brian Brooks again dropping straight fire when he talks about the antiquated payment networks that are out here and talks about Ripple and others. Take a listen.
Fluffy? Could this actually be a good thing? A sort of winnowing, if you will?
Well, it's when you talk about it in these terms, Elon, it's a little bit like asking questions of, are mortgage-backed securities the best driver of rising homeownership rates, or are they a risky asset that has the potential to tank the global economy? And the answer is yes. So the problem with talking about crypto in terms of asset values, I mean, you could begin by just saying after this giant crypto crash, Bitcoin has only outperformed the S&P 500 in the last 12 months by 5x instead of 30x. You could look at it like that. That would be one way of looking at it.
30x is better than 5x, though.
But 5x is a lot better than the S&P 500, and the next tent isn't having a panel about the future of U.S. equities. Right? So the point that I always try and tell people is, the biggest issue that I always try and focus on is cryptocurrencies are really not about currency. And the biggest misunderstanding of this whole discussion is the belief that if crypto is not doing a great job of replacing the U.S. dollar, then crypto is failing in its mission. And what I think we'll talk about a little bit today is the idea that most of crypto is about replacing the centralized banking system with networks that allow user control versus bank CEO control. The crypto assets that have prices are more like internet stocks. It's more like you bet on Google if you think there's going to be high internet traffic, and you short Google if you think people are going to go back to the post office, right? But it's not that Ethereum or Ripple or anything else is trying to replace the US dollar. It's trying to replace a system of transmitting value. And we'll talk a lot more about that. So for me, the prices are not that relevant any more than Google's volatility is. And in the early days of Google, that was super volatile.
Fluffy?
There you have it right there. And that to me tells me we are right over the target, ladies and gentlemen. This is about replacing the antiquated payment networks that move value. The value is in the protocol. The price of the token is a distraction. And my digital perspective on this day is that Ripple is the next Google, Amazon, and IBM combined. That's the tweet. That's where we are on this day. Let's keep it moving. We got a few more things to see here. This here from Jim, James K. Filan. Shout out to you, Jim. Ripple defendants have filed a letter opposing SEC's continued efforts to seal its response to Amici regarding the SEC's experts, stating that the SEC's arguments are on their face about shielding the SEC from public criticism. There's no doubt about that. And, when you basically look at this, and I'm just going to give you a paraphrase of all of this. Basically, the SEC is trying to block out John Deaton and the 68,000+ XRP holders that he represents, myself included. And if you haven't joined, you should, because I tell you, he is our voice. Ripple and their legal team are their voice. And that's the way it goes. And we have John, and John is the only thing we got between us and the SEC doing whatever they want. So we better be damn thankful that he's there. And don't forget to tune in to him tomorrow on Charles Payne's show, Making Money, between 2 and 3 p.m. Eastern Time. I found this a nice tweet. Shout out to Ben Armstrong, BitBoy here. They already tried to settle with Ripple and said no. They're going for the jugular, says BitBoy. And Bill Belisarius, legal analyst, says they will go even harder for a settlement. That's how much he feels that Ripple has the wind in their sails at this point, that there will be a settlement at some point, but it will probably be closer to when we get to summary judgment or here thereafter. But here's what's really at stake, ladies and gentlemen. 1 quadrillion of financial independencies, 116.4 trillion loans and stocks, 300 trillion of real estate, 50 trillion of bank deposits, 28.8 trillion in physical currency, 56.7 trillion in government debts, 6.4 trillion in gold, and 0.024 trillion in silver. And it all rests on what I believe Brian Brooks pointed to. This is not about replacing the US dollar. This is about networks like Ripple and Ethereum replacing the infrastructure for which the value moves to support and complement the US dollar. And I think Ripple and XRP and the XRP ledger do it better than anybody. That's going to do it for me. Make sure you hit the like and subscribe. Leave a comment below. Not financial advice from me or anyone else. I'll catch all of you on the next one.